Okay, I'm Ann Jaclard. I am the organizational secretary of Marxist Humanist Initiative, which is the sponsor of this panel. You should all have our lavender flyer. Let me welcome you to the Housing and Public Sector Crises, Educating for Social Transformation. The third panelist today, Ray McKay, is ill and was not able to come, but I am going to say a few things about the public employment sector and the assaults against it during my talk. And I'm going to go first and talk mainly about housing, and then Andrew Kliman's going to speak about the economic crisis and show you a lovely PowerPoint presentation. Okay, but let's not delay because time is short. We want to make sure there's plenty of time for discussion. Yes, I have had many decades of experience in the housing field of tenants' rights, starting in the 1960s when the civil rights movement came north and gave birth to a huge tenants movement in New York, which few of you here are old enough to remember, but it was tremendous. Every building had sheets hung out the windows saying rent strike, and everybody was on rent strike, and there were all kinds of constant demonstrations and pushing the law forward and making some changes. Obviously, we did not solve the housing crisis in the 1960s. But I'm not going to talk about that today unless you ask me about it, because I want to talk about the current movements to prevent foreclosures and evictions that are going on right now. The name of this panel includes educating for social transformation. So I just want to start by saying that doesn't mean you learning about working class struggles around housing and jobs, nor does it mean the nuts and bolts of how to conduct them. Rather, the main point of my talk is that struggles or resistance or organizing alone will not achieve a social transformation that can make significant and sustainable change in the lives of the masses of people, as long as we're within capitalism. Theoretical work is needed as well to escape the confines of capitalist ideas and practices. My organization, Marxist Humanist Initiative, believes that specific issue struggles need to go hand in hand with education about capitalism, what it is, why it cannot be reformed. If that's true, we need to prove it, and what needs to be uprooted in order for a different society to be able to freely develop. If we don't talk about this, then we on the left are fostering the illusion that a movement alone could achieve income or housing for the entire working class within this system. An equally deadly illusion is that whatever victories mass movements can force out of capitalism can be sustained within capitalism without continuous and exhausting struggle. Only if workers are aware from the start of their struggles that the theoretical problems involved in the illusion of reforming capitalism, we believe, can their movements have a chance of developing the theoretical side as well as the activity in order to really get to revolutionary change. And I'll say some more about that later. But let me tell you about some of the latest developments in housing and what they call Take Back the Land organizations. I attended the inaugural conference of a new group here in New York called Organizing for Occupation, and their short name is O4O, Organizing for Occupation. It was July 23rd, and they emphasized that quote, housing is a human right. That's their general principle, and they featured activists from these so-called Take Back the Land groups around the country and around the world, and it was very impressive. I was not aware of the extent of these groups in spite of my being involved in housing matters. They are all engaged in direct action to recover vacant land and housing, to go and occupy vacant land and housing, and to prevent evictions. The New York group is following the format of other U.S. groups. That is, they go and identify available housing, fix it up. They call it people-less homes that they're preparing, move people into these people-less homes, and then defend those occupancies. 040 has its roots in the squatters movement that flourished in New York City, especially the Lower East Side in the 1970s and 80s, but that was a long time ago. Today's Take Back the Land groups work to prevent evictions of both renters and owners of property and mortgage foreclosures. They counsel people, help them fight in the courts, and negotiate with the banks to keep their homes. So there's this legal side of the work. And activities range from using the legal system to seizing the vacant housing to what they call eviction blockades. After organizing the neighborhood, the neighbors gather on the date of scheduled evictions and physically prevent the authorities from carrying out evictions, if they can. Take Back the Land activists came to the conference in person from Rochester, New York, Boston, San Francisco, and Chicago. There were also activists from New York's Picture the Homeless organization, and we heard via Skype from the Miami Take Back the Land movement and from activists in current urban occupations in Brazil and in Spain. And the Spanish person told us that there are now such squatters movements all over Europe in response to the austerity, and that they had recently met together to try to coordinate European work. The Miami group helped to establish the pattern of searching for empty but decent houses and seizing them. It had occupied some buildings in the 1980s and 90s, but with less success than they're having now. According to Max Ramo, one of the organizers, they opened up 11 houses in the last 2 years, repaired them, and moved families into them. And he said they will physically defend these occupations, quote, like the labor movement used to be, close quote. They also visited Bank of America, the leading mortgage forecloser against homes, and they asked Bank of America to hand over 100,000 vacant houses that it owns for the homeless. The bank people laughed, and then they called the police to get them out of their office. Nationally, 15 million people had or are having their houses foreclosed, with 8 or 9 million already forced out. And of course, many of these are rented, so they're not even just owners who are losing their housing, they're renters too. Another group, City Life, La Vida Urbana, has fought displacement in Boston for 38 years. They have prevented thousands of evictions. They counsel about 120 people a week, canvass about 100 homes a week, and have 2 or 3 actions a week. In addition to eviction blockades, getting all the neighbors to prevent the eviction, they hold demonstrations to demand that the banks sell foreclosed homes to their former owners or to nonprofit groups that will create low-income housing from them. There are many, many more stories we heard in this all-day conference from people around the country, and they were very inspiring. And the conference proceeded to implement a similar structure and plan for 040 in New York. And just a few weeks later, 040 helped to prevent the eviction of Mary Lee Ward, an 82-year-old great-grandmother in Brooklyn. The house she lived in since 1967 was foreclosed against following several years of shady deals by banks, lenders, and the current owner, who the bank sold it to, and it's not her. Although 040 generated a lot of publicity and turned out 200 people to help defend the house on the day her eviction was scheduled, and prevented the eviction, but in fact, you can't really credit 040 because a settlement was already in the works after a very long legal and political campaign that she has waged with the help of a community organization. And negotiations are still going on. So I could not help feeling, although I was inspired by this conference, I couldn't help feeling there was a certain amount of adventurism in trying to stop evictions with less than a mass movement behind you. Some of the stories they told were about in small suburbs of Boston, etc., where they could turn out more people than the entire police force of the town. But that's not going to happen in New York. Okay, in my opinion, you can't compare these groups, as the organizers of the organizations would like to do, to the massive housing movements that have gone on and are going on in some other countries. One of the organizers who came from Boston was realistic, and he said, quote, "How do we get from here to Tahrir Square? Real estate is so powerful that we need 100 times the protesters we have." Some at the conference also discussed the theoretical underpinnings of the movement, which seemed to be mostly the idea that housing is a human right. It's a right enshrined in the United Nations Declaration of Human Rights, and others made connections to the labor movement and to the civil rights movement. One of the Rochester organizers characterized their movement as, quote, an underground railroad. But none of them claimed that they could win housing for the whole working class within this economic system. Some thought the movement would succeed in changing the housing problem bit by bit. Oh dear. That is, thinking that they could seize enough land locally and that would grow and there would be others and eventually they'd have all the land in the state, all the housing in the state or something. But more than one activist raised the problem that few of these occupations last for more than a few months. And the most they can usually hope for is to make it so much trouble to evict someone that the owner agrees to negotiate refinancing or a buyout. One of the Rochester organizers, after listening to others claim that their movements could win control of local housing, said, quote, "I'm more radical than the others. The owners won't give up anything." And I have more quotations, but I don't want to take too long. Leftists are probably more familiar with the history of land occupations than with urban housing occupations in general. You may well have heard of the Brazilian landless farm workers, the MST, who have carried out mass land invasions on unused land, which they then turn into collective farms. The electoral victory of the PT in Brazil was supposed to change everything for the poor people of that country and make this no longer necessary, but it has not. Surprise. I'm not surprised, some of you may be, but you can have a very nice social democracy, but you can't escape the pull of capitalism as long as you're living and producing within it. So land seizure movements continue there and throughout Latin America. There's recent news from Honduras about farmers taking land and establishing cooperatives, and elsewhere in the world. Even more people, however, than involved in farmland seizures are migrant workers who left the land for the cities in order to survive and are involved in seizing land and building shacks and creating communities in areas that surround large cities. And I've visited some of these occupied areas in Peru, Mexico, and Brazil, which if anyone wants to know more about, we can discuss. One rarely hears about urban occupations, though, except during especially harsh economic times and revolutions. They're going on right now in not only Spain and Brazil, which I mentioned, and throughout Europe, but also in South Africa, where the shack dwellers movement battles the government continuously for housing. And if you thought that the end of apartheid brought freedom to the black people of South Africa, you haven't been paying attention lately. You should go on our website and read. We have 2 articles from South Africa, but the ANC government has turned out to be a horror. Not only have they not complied with the wonderful constitution of the new country that guaranteed homes to everyone, there are in fact many more homeless people now than there were before the end of apartheid and election of the ANC. And they are extremely repressive. In addition to the long article on our website, The New South Africa, Poor People's Movements Defy ANC Policies, there's another story that we're going to put up, which we just got yesterday, about a particular struggle in Cape Town, where the reactionary police, their name of this police unit is Anti-Land Invasion Unit. And they demolished more than 100 structures in an urban area in Cape Town. And these are shacks that people are forced to build because they have not been provided with low-income housing. And periodically the government just comes in and demolishes them to get rid of the poor people. They demolish their shacks. They did this particularly before the, was it the Olympics or the World Cup was there? And they didn't want the poor to be visible, so they just come in and bulldoze their shacks, and they resist them. Oh, can I have a little more time? Mm-hmm. I'm not going to make it. Thank you. Well, let me mention this. Land redistribution has been an element in revolutions for centuries, but particularly since the Mexican Revolution of 1910 and since. For the multi-dimensionality of revolutions that include land and housing struggles, one thinks, for example, of the 1975-76 Portuguese Revolution that brought an end to the long dictatorship there. And I just want to read this pamphlet, Working Women for Freedom, was put out by Marxist humanists in 1976. I just want to read a paragraph about the women in the revolution. There's no way to escape the pivotal role of the women, either before or even more magnificently during the revolution. Whether we look at the peasant seizure of the land where the women were the most active, or the industrial strikes in the cities where the women were the most militant, or the creativity of women workers in Lisbon who took over a laundry plant to turn it into a free service so that, quote, working class women will be freed from housework, or the direct establishment of a women's liberation movement that fought for specifically feminist issues, such as the right to abortion. So when the movement, my point is, when it's tied up with a whole revolution, it has a very profound dimension of there are some organizations today, there are many, many organizations today, housing organizations all over the world. You can find them on the internet. I was going to talk about one, but I'm going to skip it. I'm glad to see the international dimension, people sharing information, but I don't think any housing group can make real its relationship to other movements and to land occupations simply by declaring itself part of a movement that holds housing as a human right. So I'm somewhat wary of organizations, especially U.S. ones, that claim to be part of an international movement on the grounds that they're for the public seizure and ownership of land or buildings. We need more of a theoretical basis for saying that we're part of others' movements, especially mass movements that are revolutionary, more than you're going to get out of the UN Declaration of Human Rights, a 1946 document that has never been enforced in the least, any of the rights it mentions. Hardly surprising, since the UN is a tool of the major capitalist nations. I'm also critical of some of these groups whose political perspective is entirely to build, quote, resistance. I can't go into this, but some of the rhetoric sounds a lot like the so-called anarchist or autonomist views that we can create a new society by saying no to this one and building islands of resistance and cooperatives. Marxist humanism believes this can't work, and that much more is involved before change is thoroughgoing and sustainable. And the actual uprooting of capitalism and replacing that mode of production with a new human one that enables the development of a fully free society. We cringe when we hear leftists misleading the working class by saying it's possible to defeat, quote, Wall Street and to use its profits for social good. Maybe people who want to talk about the current Wall Street occupation. But capitalism needs its financial sector, it needs credit to survive, as we saw when the 2008-9 crisis almost brought the system to a halt. The left, in repeating that the problem lies in the distribution of wealth rather than in the capitalist mode of production, condemns the working class to continuous resistance, rebellion, without ever being able to actually win a permanent new beginning for human life. And we believe it's incumbent on the left to state the nature of capitalism and the possibility of replacing it with a non-capitalist world, and to say it loudly and clearly, and to include others in our study of Marx and in the vital task of preparing theoretically to uproot capitalism entirely. We don't have the plan. It has to be worked out. It has to be worked out with the working class, but we have to start talking about it now and not mislead people into thinking it just means activity and more activity. And Andrew's going to be addressing this by talking about crisis and recession. And I better end without talking about worker struggles, but again, if you go to our web publication on our website, you'll see an editorial on public sector workers and defending them, and you'll see a recent in the featured stories, a story about the Verizon strike and the interesting relationship between the public service workers and the private sector ones, who I think have agreed from Wisconsin on and did it at the support work for the Verizon strikers, that only a coalition and mutual support between the public and private working sectors has any chance of succeeding against what's going on in the world today. So let me end there.
This relative economic stagnation set the stage for a massive debt buildup, and that in turn contributed to the length and severity and the continuing effects of the Great Recession. So we're all in agreement about that. I won't say more about it. The question is, what caused the relative stagnation in the economy since really the mid-70s? Now, the most obvious explanation, if you're an economist, it's obvious, the cause of relative stagnation, it's obvious, and therefore it's the most plausible explanation, is, on the face of it, is that the rate of profit fell and failed to rebound thereafter in the 1980s. And the persistent fall in the rate of profit produced a persistent fall in the rate of accumulation, new investment. And the falling investment share led to sluggish growth, rising debt burdens, and so forth. The evidence for the United States, at least, and that's the only economy we really have data I consider acceptable for, The evidence for the United States indicates that this obvious and plausible explanation is correct. So let's look at some of this. Okay, this graph shows movements in U.S. corporations' rate of profit. A broad measure of profit is used in the top, the share of corporations' output or net value added minus what the workers receive. So this is everything they produce minus what the workers received over the investment in fixed capital, fixed assets. This rate of profit fell from the early post-war period, and it's continued to decline since the 1980s. Now, this is something that can be affected by inflation. Notice that the 1970s were not a period of tremendous expansion, but that rate of profit went up. But here's, the blue is the inflation-adjusted rate, deflated, if you know, by the gross domestic product price index, if you're familiar with that. So, you know, this is the red is the unadjusted one. There's not much difference. Both of them fall throughout the post-war period, continue to fall since the 1980s. Now, here I think is the most significant graph. This looks at the relationship between the rate of profit, red, and the rate of accumulation. And remember, my thesis is they don't have so much profit, so they don't invest so much profit in production. And that's what causes the slow growth. And that's what we see here. There's a very tight relationship between the red rate of profit and the rate of accumulation.
I'm sorry, the accumulation is wealth?
The accumulation is net investment. Investment minus depreciation. This is investment in what they call fixed assets, equipment, software, structures like office buildings and so forth. Okay, as a percentage of the cost of the fixed assets, the investment. So it's new investment as a percentage of existing investment. It's the rate of growth of investment. And the rate of profit is profit as a percentage of the same thing, the historical cost of fixed assets. Okay, so over the last 40 years, the rate of accumulation has just tracked the rate of profit very closely. And this, if you know anything about statistics, the R squared here is 0.83. So 83% of the movement in the rate of accumulation since 1970 to 2009 is explainable by movements in the rate of profit. Yeah.
Sorry, is rate of accumulation the percentages on the right?
Yes. I'm sorry. Yeah. That's the right. The left is the rate of profit. Okay. So there's been a relative decline in investment of profit in production, because there's been a relative decline in the generation of profit. Not a surprising thing, but it goes against the conventional wisdom. One reason it goes against the conventional wisdom is that some economists use the term rate of profit to refer to something that isn't the rate of profit in any normal sense. What most people, businesses, investors, what Marx meant by rate of profit is profit as a percentage of the money that's actually been invested. You know, what kind of rate of return you're getting on your investment. That's what we have here. But when they talk, some of these folks, about rate of profit, they mean profit as a percentage of the amount of money that businesses would currently need to replace all of their capital assets, not the amount of money they actually invested. But what business people care about is the profit they're getting compared to how much they actually invested. So, whereas you see that the actual rate of profit, as normal people use the term, has not picked up, the so-called current cost or replacement cost, so-called rate of profit that some of these people talk about, that did go up. This is 1980. Okay, so it rebounded from the early 80s to some extent. But actually, it doesn't really even rebound after about 1984. It's more or less constant. In any case, it rises, but since it's not a rate of profit in any real sense of the term, it doesn't really matter that it rose. and it rose while the rate of accumulation fell. So that just serves to indicate that it doesn't function like a rate of profit. The rate of profit governs capital accumulation. Businesses' decisions are, in other words, they're not really based on this. Okay, another respect in which I found something very surprising is that some economists have stressed that the share of profit that's been put back into productive investment accumulated has fallen since the 1980s. Okay, technically what they're saying is correct, but it's extremely misleading. Here you have the post-World War II period, the beginning up to 1980. Okay, 4 different measures of profit. And we're looking at net investment or capital accumulation, what share of the profits were invested. Okay, green, 1981 to 2001. By all 4 measures, there's actually a greater share of profits put back into productive investment, not, diverted into Wall Street and financial instruments. Okay? 2002 to 2007, something serious happens, but I think it's mostly a statistical fluke based on the artificial boom of the mid part of the decade. You get so much profit, it could not all be invested immediately. A lot of investment projects take a good deal of time to plan and stuff. So I think it's mostly a statistical fluke. By about 2007, 2008, this had recovered, the gray had recovered back to the historical averages. Okay, another surprising thing that I found going against the conventional left wisdom has to do with the compensation or pay of workers. In 2008, John Bellamy Foster and Fred Magdoff published an article in Monthly Review which showed that wages and salaries fell from 53% of gross domestic product in 1970 to about 46% in 2007. This is correct, but again, it's extremely misleading. It leaves out a lot of things that are in fact reported in the same table from which they took this number. First of all, it leaves out employers' payments for Social Security on behalf of their employees, Medicare payments, Medicare taxes that the employers pay for their employees, retirement benefits, private retirement fund benefits that some workers receive, medical benefits. Okay, all of that is part of workers' total compensation. And so the US population is getting older, it's living longer after retirement, healthcare costs are rising, especially quickly, so these additional components have risen a lot faster than just plain old wages and salaries. So you really don't have any decline at all compared to 1960, a little bit compared to 1970, but when you add in other social benefits that the government pays, government payments to workers for Social Security, Medicare, unemployment insurance, welfare, veterans benefits, minus the tax contributions. I mean, our tax monies pay, some of this, but this is the benefits minus what we pay. So when you add in that extra that we get from the government, there hasn't been any decline at all since 1970 in workers' total share of income, and it's a good deal higher than in 1960. So no change really since 70, much higher than in 1960. We can talk about whether benefits count as compensation. I think they do. I don't really have time to go into this. Now, what you might be thinking is, well, gee, some of these employees are managers. So it could be that the total employee compensation, has pretty much remained the same because the managers are getting a whole lot where regular workers, have been taking a big hit. Past couple of years, yeah. But I'm talking about the causes that led to this. So I looked, is it the case that the workers' share of income remained stable because the managers were getting everything, squeezing the other workers. It did not turn out to be correct. The manager's share has gone up very slightly, but not hugely. The figures only go back really, this is from the Labor Department, to 89, but at least over the past 20 years or so, the manager's share has just risen very, very slightly. And managers here only includes, you know, real managers, not like managers at McDonald's, right? Okay, now, if we look at workers' total compensation, not just wages and salaries, their real or after inflation compensation has risen significantly. It has not fallen despite what you may hear, and it's higher than in the 70s. Okay, so this uses one price index to deflate, to control for inflation, the personal consumption price index. Here, you look at the workers' compensation with the consumer price index for urban workers. Again, it's risen. It has not fallen. Okay, so I don't mean to imply that working people are living particularly well. They're not. But the reason they aren't living well doesn't have to do with any decline in the share of national income they receive. It hasn't declined. So they're not living well, not because, you know, things have gotten worse. They weren't that good to start with. Okay, we tend to idealize the past. The condition of workers in this country was not that great, really ever. Okay, so what does explain the slow, there has been since the 70s, very slow growth of wages compared to the early post-war period. There has been a marked slowdown in the growth of wages, but it's not due to the workers getting a smaller share of what's produced. What it has to do with is the relative stagnation of the economy. The slowdown in the growth of the gross domestic product, or here the corporations' contribution to gross domestic product, their net value added. The degree of slowdown from the early to the latter part of the post-war period, early, latter, the degree of slowdown in compensation, green, is almost identical to the slowdown in the growth of the output, the net value added, which makes sense when you realize that the worker share has basically been constant. So what is really responsible for the slower growth of workers' compensation, adjusted for inflation in two different ways? What's responsible for that is the slowdown in economic growth, which goes back to slower investment or accumulation, which goes back to the fall in the rate of profit. So to conclude, the economy's been sluggish for decades due to a falling rate of profit, fall in the rate of accumulation that followed from that. And these are the problems, rather than a fall in the worker's share of income, that have led to slower pay growth. And this suggests that share the wealth struggles nowadays are going to operate under very strict limits. During the last several decades, the wealth has not been there to share. And the economic crisis and recession have greatly exacerbated this problem. Now, I want to make clear, I'm not saying that you can't win anything. Struggles to protect workers' standard of living and even enhance it, I think they can succeed. But they cannot succeed without causing the rate of profit to fall further than it's already fallen. You give more to the workers, you're taking away from profits. Okay, so profitability will fall further if there are any successes here. It's already, you know, not a healthy state for capitalism. So the system will become less stable. It'll become even more prone to severe crises and recessions, and that will tend to it'll tend to threaten to turn whatever successes that are gained into failures. That's a constant threat. So working people need to be aware, and intellectuals need to help them be aware, I'm just going to scream over this, that when they help themselves by fighting to protect their standard of living, they're hurting the capitalist economy, not helping it. They're helping themselves, but not the system. If they're not aware of this, people are not going to be prepared for the obstacles they face, and they won't understand why their efforts to make their lives better are meeting with such fierce and deeper resistance. But there is a reason for that. It just isn't the case that what's good for working people is what's good for capitalist America. So the only way to get beyond this contradiction is to replace capitalism with socialism, a people-based socioeconomic system. There can be victories, but they'll tend to destabilize the system. Okay, the only lasting victory is of that kind.
Your analysis, did it take into account the effect of taxes? I know hearing that corporations used to pay a lot more taxes relative to workers in the past, so is that skewing the statistics?
I was just going to say that, I think a lot of it has to do, well, my question, I would think that one of the reasons that the profitability has been drained off has been that, as you said before, that the productivity didn't seem to be profitable because they couldn't make so much money by investing it in those things, so they diverted it to financial investments and investments overseas to build up other countries. And we started to get a lot of competition around that time from Japan and from Germany and other companies like that whose economies we built up after World War II. They were now almost on an equal playing field with us, and now of course China and India are doing the same thing. So, I think most of the problem, from my perspective at least, is that it's has all to do with the tax code in the United States, and it's just not fair the way it distributes wealth or redistributes wealth. And I think that's really where the first look has to be, and first type of adjustment.
First of all, regarding the diversion into financial investment away from production, it did not happen. Okay? During the first 21 years of neoliberalism, so-called, a greater share of profit, according to 4 different measures of profit, was invested in production, as compared with the early post-war period. Profit from overseas, I looked at that. It's in the book. The rate of profit of U.S. multinational corporations on their overseas investment, it's measured a bit differently because the statistics are different, but it fell more sharply than domestically. And it was pretty widespread. So it could be, it's hard to tell, just that we're dealing with a worldwide fall in the rate of profit. To some degree, can you trace it to competition? Increased competition, especially since the 70s? Absolutely. But that's the nature of capitalism. The US enjoyed a very privileged situation when the major economies of the world, with the exception of it, were decimated after World War II. If you don't have that kind of a situation, if you have a more competitive environment, well, they're not going to be able to do that well. Corporate taxes, you asked about corporate taxes. Do they skew the numbers? Absolutely, absolutely. And it's not something I mean to hide, but the reason I look at broader measures of profit, like before tax profit, and even broader thing I looked at, is to be able to trace the source of the big buildup of government debt. Not the past couple of years, but until the last couple of years, I'm able to show that the entire buildup in the government debt ratio, debt as a percentage of gross domestic product, the entire increase is due to reduced corporate taxes as a percentage of GDP. So think of it, the actual rate of profit being generated in production hasn't been doing well. But to keep this corporations afloat, what the government has done time and again is to lower corporate taxes. Okay, and that keeps the system moving along. But that's one of the main mechanisms of this big debt buildup that we've had. So it's a displacement, but not a negation of this analysis, based on the laws of capitalism and falling rate of profit. You asked about the corporate sector. The corporate sector is not just the industrial sector. It includes any corporations, real estate, land, all of that. Certainly, there were big real estate profits made during the boom of the last decade. There's no doubt about that. The rate of profit rose tremendously during the last decade, but that was just a temporary artificial boom, largely due to Federal Reserve policies. This is 2001, 2002, and that's 2006. Okay, you get a tremendous artificial boom in profitability, largely due to exceedingly low short-term interest rates, bringing down other interest rates, speculation and all of that. So yeah, if you want to talk about like a real estate boom, that's largely what's being reflected there. And other things, that's not just real estate profit, but your house is worth more, or you sold a house, and so you buy stuff, and people buying stuff, the rate of profit goes up temporarily. All kinds of factors like that. Do you want to address maybe Mike's question or anything else?
It's not, there isn't enough money in rich people's salaries, because they're a tiny percentage of the people, 1%, to pay for everything we want. But secondly, capitalism isn't fair. Capitalism works on the profit motive, and capital is going to either be invested where it thinks it can make a profit, or we're going to have stagnation, crisis, the corporations collapse, and then everyone will be out of work. So you can't just take away the profits and not have serious consequences. And Andrew talked about the consequences of the falling rate of profit. Well, it's going to fall further. But the problem in talking to people about this stuff and saying, look, we want to engage in all your struggles with you, but we're only going to do so while at the same time talking about the nature of capitalism and the fact that it can't be reformed to give workers everything they deserve. When you say that and try to explain to them the problem is not in distribution, but in the way the whole system functions, and specifically a mode of production, the kind of production, the way we work to produce profits, it's harder, right? You have to do some work to understand that. It's much simpler just to say these greedy guys are grabbing everything. And it's sort of like built into our intellectual wiring from however many million years people have lived. They always thought, the gods were taking their stuff, or, whoever, or the serfs and the slaves and all that. It was true that somebody else was taking the products of their labor. And it's true under capitalism that they're taking the products of the labor, but that's not the problem, because it's inherent in the capitalist system to operate that way. So what we're worried about, and the reason we talk about this so much, is that if people just concentrate on the question of distribution, instead of understanding that distribution follows from the mode of production, not the other way around. If people don't realize that, then people are going to have a lot of illusions. Oh, if my boss would just give up a little of his salary, he could raise my salary. It doesn't work that way. So we don't want to give people illusions. We don't want to lead people down a primrose path path and say all you have to do is fight a little harder and you can maintain your salaries and improve your salaries and all that. Maybe they can, and certainly they need to fight when threatened, as all workers are now, to keep their jobs and improve their salaries. But we should fight with a clear understanding of the limitations of the fight and the need to supplement that activity with, as I was saying, the hard theoretical work of how the hell do we get beyond the system? How do we uproot the system and start a wholly different one? So let's see who else wants to. Let me just see if there's someone who hasn't spoken. Oh, is that you? Okay.
Also, I'm wondering, I read somewhere that the total, the global GDP is about 50 trillion, and the value of the stocks in Wall Street is about 600 trillion. So there is a discrepancy between real value and how much of the production is, how much of the capital, the real capital, the relation between real capital and fictitious capital is about, and did increase during the last decades.
You know, one of the things that I truly feel, without the statistics to back it up. By the way, my name is Dennis, I'm from class of 76 here at St. Francis. Wall Street, to me, at this time, doesn't seem to be doing the job that it was created for. For example, you know, back in the teens and whatever it was, people came to Wall Street to put their money together, to invest in companies, to raise money, to start new ventures, to make a profit on the stock if it was doing well, and not if it wasn't doing well. And, you know, that worked pretty well, and they paid dividends, and it was a, you know, successful little investment game, if you will, not just a Ponzi scheme, but a game, but a real, you know, real activity based on real objective production and sales and profits. Now, there's so many different kinds of investment instruments out there. And we all know about what happened with the housing crisis in 2008, which culminated then. Because they were selling bundle pieces, slices of mortgages and packaging them up and selling them to companies all across the country. And then you had other companies betting against those mortgages, the credit default swaps, which became, you know, and I don't want to get into a litany of these financial types of transactions, but it seems to me, and then these hedge funds too, just to mention hedge funds, because their job is to go against the market and to try to, not their job, but to make the most profit, they have to do those things. And it seems like they are making a lot of money, most of them, hedge fund managers. And it's money that, I don't know what would happen to that money if they weren't there to pull that out. I mean, where would that money go? Would it really be as, you know, as severe a downward spiral if they weren't there to take advantage or exacerbate the negative decline of a stock on a short sale?
I used to work for a company, and we had two kinds of products. One was something we sold, and the other one was stock. And we made much more money on the initial public offering on the stock than we ever made by selling anything. And it just seems like we were getting a huge subsidy from the public, that because of hype, propaganda, whatever, we got people to invest in our company.
What year was that?
We started in 1980 all the way through, but we reached the point where we issued so much stock that it went down below a penny and we got delisted.
Occupy Wall Street and such are reformist or not reformist. You know, I don't know. I mean, obviously it's a variegated group of people, but I wouldn't want to dismiss people as like, you know, okay, you got the wrong politics. I think people are lacking information because of so much information, and these kinds of myths on the left And they're reinforced by what comes out in the New York Times and, you know, the liberals like Robert Reich, former Labor Department secretary. You know, like this whole thing about 75% of the gains in income during the 2000, 2007 going to the top 1%. If anybody knows about Piketty and Sayce, all these are data coming from two economists named Thomas Piketty and Manuel Sayce. And there's nothing wrong with the data other than they're peculiar. They come from tax returns, which is problematic. Second of all, they're based on tax units rather than individuals or households. You know, definitions of income, you can basically tell any story you want with income depending on how you want to define income. Like, what's income? What do you include? What do you exclude, right? So there's a, you know, among economists, there's a lot of just skepticism and just discounting of a lot of these numbers. And I've read a lot of this, and I'm inclined to agree that, I mean, Piketty and Sayce haven't lied, but their numbers are just too peculiar.
By peculiar, you mean out of line with everyone else's?
They're not just out of line with, they're out of line with everybody else's, but they're measuring strange things. You know, they're not measuring what most of us mean by income. For instance, when they use wages, when they look at wages, well, they exclude all these benefits and stuff like I was talking about, but they also add in income from the exercising of stock options. You know, you can in a certain sense that's fine, but corporations, that's not money that they pay. Okay, let me talk about the issue of total output. Oh, it's clearly increased since the 1970s. The real issue is this. From the end of World War II up to about 1973, it increased at a certain rate. This is like gross domestic product adjusted for inflation. In the period since 1973, it's increased much less. If I remember, the world average is that the rate of growth went down by about 38%. In the US, it went down by 26%. Okay, so there's been a slowdown in the growth of total output. It's increased. Okay, you say that on the world scale, GDP is like 50 trillion. There's different measures, but yeah. And the value of stocks is about 600 trillion. But you're talking about 1 year's production. That 50 trillion refers to 1 year, whereas here, what a share of stock is well, it's a share of ownership of a corporation. And people are saying, okay, the earnings of the corporation all throughout the future are going to be such and such. Okay, so it's really wrong to be comparing 1 year GDP with the total valuation of stocks. And it's the same thing for bonds or any other financial instrument. It's a way of trying to measure, or it's not a way, it's based on measures of a flow of value or income throughout the future. Fictitious capital, I really don't know. I've tried to do some looking at it, but I don't have any firm conclusions at this point. It's a very difficult thing. Clearly, there were excess valuations in a big way in the middle of the last decade in particular. But that's about all I can say. You know, I think Wall Street and all of this has always been speculative, has never really performed much of a social function. The crises of capitalism have always taken the form of financial crises and taken the form of, you know, risky bets that went bad. And at that point, fraud is revealed. And I mean, just go back to writers of the 19th century, and you see this all the time. I mean, you know, it's there in Marx. He's talking about, what's the term he uses? Not speculators. Begins with an S. Swindlers, that's it. Yeah, he says, and the swindlers this and the swindlers that. It's all about the swindlers, right? So, you know, it's like, I don't want to deny that the swindling takes place, but it always takes place. You know, the secondary stock market, which is the stock market that we know, not the IPOs, does not provide companies with any funds to do real operations, and it never has.
Well, the initial offering is the only time they get money.
The initial offering is the only time they get money, and the same thing for the bond market. You know, you got the selling in these securities, selling in those securities. It's the initial sale only that provides funds. That's an extremely small portion of these markets, and it's always been like that. You know, as to why we have such speculation and stuff, one thing to think about, I'm not going to say for sure, but one thing to think about is if profitability is down, if the system is not, you know, generating the goods for the corporations and such, they're going to take on more risk. They're going to gamble more. And you know, almost all of Wall Street is just gambling. So, to get into the question of what if these people weren't there, I cannot imagine a financial system where people can't short. I mean, how could that be? I mean, how can you say you can only buy long? You know, I mean, what if for everybody who thinks something's going to go up and is optimistic, to have a trade, you need somebody who thinks it's going to go down and is pessimistic. So, you know, I think you want capitalism to not be capitalism. And I just want not to be capitalism. But I'm not going to like ask capitalism not to be what it is.
That's not really what it is.
Okay, yeah.
Have you answered everything?
Yeah, I think so.
Wind up.
Yeah.
Okay, we don't want to keep anyone from lunch. But again, we have a few books up here, and we have a book table downstairs just across from the registration, which we will reopen in a few minutes. So please come by to talk further, to look at our things. Did everyone get this purple flyer with our website address on it? Good. And do we have the mailing list? Do you have that? Anyone?
Sign the mailing list.
Yeah, please sign it. We only do like one mailing a month or something. We'll let you know if we're having a public meeting or speaking somewhere in the area, or if you're not from New York, indicate that, tell you about your area. And what's new. So thank you for coming. Thank you for remembering swindlers.
And they just need to learn more, read more Marx, or remember, it's just easier for them to just say it's wrong, read.
No, I don't think it's just a question of people reading. I mean, people need access to information, and it's really hard to tell everybody, you know, read 3 volumes of Capital and figure it all out for yourself and understand all the references. Okay, things don't work like that, but what we need to do is to get, you know, the revolutionary ideas and the revolutionary analysis of things more available.
PowerPoint, then would you like a copy of this
You know, I
video?
mean,
Yes, we would, actually.
Or
We'll send you.
or something.
You know,
Or when you,
numbers in the video.
you can
Yeah,
just
our
send me an
address is
email.
on there,
But, you know, even
but
though
we'll
that
send
stuff
you,
isn't being heard for whatever
over
reason.
there.
Oh, if I sent the video to this address, it would.
Yeah.
This
Yeah, you're
address-
gonna send it electronically?
Yeah, I mean,
This is our email.
Oh, no, I can't send it
Oh,
electronically.
you're gonna
Yeah,
send a
Yeah.
CD, okay. Then send it to the post office. But first, we'll send you, Andrew will send you electronically.
Oh, yeah, it was,
The slides that he used, and you know how to do that, splice them
9%
in.
unemployment
Yes.
is
It was very,
is a
very
national crisis,
interesting.
and somebody should do something about it.
both
Well,
reports
hey,
were
you're
very
the Federal
interesting.
Reserve, and if you
Thank
can't
you.
do nothing about it, they don't know what to do. They can't do anything about it.
Well, they can do monetary policy, but that's almost useless now because they're down from 0 interest rate.
Yeah, exactly. So, you know, and what are they gonna do? Run up the debt more?
Yeah.
You know, they can run up the debt more, and then people are gonna say, gee, this isn't worth so many euros, you know, or so many renminbi.
And they can't do it anyway, because any time anyone suggests that, they will be voted down in a heartbeat, you know.
Well, they voted down in a heartbeat until they voted up in a heartbeat.
Do you want
Depends on
to
what the
reopen
heartbeat
the
is.
Well,
table?
yeah, if the